Hey guys, this is Mark Shaw's in the Pattern Trader. It's Monday, March 8th, and we're about 10 minutes away from the start of the U.S. Trading session for the stock market, 9:30 a.m. Eastern Standard Time. And I'm just getting prepared for another day in the trenches after a very robust several week trading. So I'm still mentally and actually physically exhausted. I saw a setup in the NASDAQ that I alerted our members all the way back on Friday, February 19th. I saw a key reversal at the top of an ascending broadening price pattern, which is typically a bearish price pattern. And while it was very early, I went out and loaded up on the put options right at the top of the NASDAQ when the Triple Qs, which is an ETF that tracks the NASDAQ, was trading around 334. I was buying puts for the next week that expired 1 week later with a strike price of 320. So this meant that the QQQs would have had to fallen at least 14 points, like a 7% move in 1 week for me to get paid back. I put about a $100,000 bet on this, and if I was incorrect about my timing, I would have vacated all of that 100 grand out of my account in 1 week. As it turns out, I was spot on. I was buying these puts for about $1, and I got out of some of them around 6 and some out around 8. So I made between 5 and 800% on those option premiums in just 2 days. I cleared out of them just the following Tuesday into a collapse in the NASDAQ. And then 1 week following, last week, I did the same thing. I loaded up on the Triple Q puts, strike price 307, and at some point the Triple Qs went to 297 last week. I cleared out of those options. I made another about 800% on that batch of orders, and so collectively, I made over 7 figures. I made over $1 million in 2 weeks. My objective was to make $1 million on the ascending broadening price pattern, but frankly, I set my sights on a higher target. I didn't think that I would make it this fast. So I think I'm going to make a whole lot more. I think the NASDAQ right now is in a tug of war. I'm going to show you the charts in just a moment. At about between the 300 and the 320 in the QQQs. But eventually I do feel like the NASDAQ will break lower. So I'm going to kind of show you my screen, show you what I'm looking at. I'm looking at a bunch of plays going into this week. There's a stock WRK that is a very unsexy, low-tech stock. And I do think there's going to be a rotation out of tech and into these unsexy, less glamorous stocks. And I really like the chart pattern of WRK and, looking at loading up on some call options if I can get the right price. I'm also looking to buy put options on the QQQs. I'm hoping for a rally this morning. And so, frankly, I'm waiting for the market to come to me. I'm not looking to chase anything. If I can get in at certain strategic advantages, fine. If I can't, fine. And then I will, go from there. So I'm looking at a number of plays. I'm also long pound New Zealand in the currency markets, and I've been looking for that market to start taking off, and that's exactly what happened today. We've been kind of gestating between the 190 and 192, and this morning we took off above 194. So doing well on those long positions, and then if that wasn't enough, I've been short gold for the last month. From the 1841 price level all the way back February 9th. I've been short gold at 841. I then added to my position at 1797. And today we're trading at about 1695. So I'm making over $100 in my gold positions and mid 6 figures in those positions. So it's just been a bountiful harvest in the last couple of weeks. But I'll take what I can get. So I look for, 1 or 2 of these periods a year to make my year. And it's, just the first quarter of the year, and I'm already, a long way toward my objectives for this year. So with that said, I'm just going to kind of show you a couple things that I'm looking at in the market. So a moment ago, I alluded to this tug of war in the NASDAQ. On the chart in front of me is the NASDAQ spot index. And you can see that there's a massive head and shoulders bearish price pattern, which to me indicates that prices will eventually come down. but you can see that we had a spike on Friday, and right now we're right at the inflection point, right at the neckline of this Head and Shoulders bear price pattern, as indicated by that orange circle. So there may be some back and forth in there, but frankly, any robust price action above the neckline, I'm going to look to sell into that. You can see over here my Forex trading screen. I'm short gold. Sorry, you can see I've got two positions. I'm making over about $500,000 in gold and long pound New Zealand, short the NASDAQ, and some other things going on in there. So having a field day in that. So basically I'm looking at a couple things going into this week. One is Beyond Meat. It made a key reversal on Friday. So I actually went long into that key reversal when the market made a new low, closed on the high. I actually may buy a little bit more over the highs here and just look for a quick burst up to about the 145 price level. Now, one of the charts that I'm looking at is this chart LQD. This is the investment grade corporate bond chart. So to me, everybody's talking about the 10-year yield and the spike in interest rates. What I'm keying on is this breakdown in the corporate bond market. So you can see right here in the LQD that prices just collapsed. And if we get a collapse in the corporate bond sector, believe me, there's going to be a spillover into the stock market, especially into the tech sector. So I'm watching some of these other instruments to give me guidance on my plays going into this week. So with that said, I wish you guys a healthy and prosperous trading day, and I'll see you next time.